now put the spotlight on the sugar and chemical sector, what the outlook is going forward, what are the latest trends in the industry. And to understand that, we now have Mr. Krishnanchandra Parwani, chemical research analyst at JM Financial Institutional Equities, now joining us from the sidelines of their conference. Mr. Parwani, afternoon, and thank you so much for joining us today. And first up, let's talk about the sugar sector. Then we have seen a lot of tailwinds headwinds when it comes to policy uncertainty, and that continues to remain a challenge for the sector. The industry and the sector has been seeking ethanol price hike, but that too has not come through. What do you think the outlook is going forward, and do you think industry uncertainty will continue to remain a problem going forward as well?
Yes, thank you for having me on the show. So clearly, as you pointed out, that ethanol price revision has not happened in almost 2 to 3 years. Last price hike was seen in ESY 23. The sugar mills have been consistently asking for a price hike from B heavy and the syrup route, without which it's not going to lift the distillery margins. In fact, what we have seen is there is a shift from ethanol from sugarcane to rice and maize. India's currently 62% of the ethanol requirement is filled by rice and maize. So that's clearly a negative. So we need to see ethanol price revision for positivity to flow for the distillery margins perspective. Apart from that, sugar mills have also been asking for a floor price of around 41 rupees a kg for the sugar. Yes, government has allowed the exports, which will put some flooring to the available stocks in the country. But yeah, it's necessary that the government looks at the sugar price as well as the ethanol price revision.
Okay, and Mr. Parwani, hi, this is Snehi also joining in. Shifting focus from sugar to chemicals now, what's your outlook on the US tariff impact on this entire sector? And are you seeing any visibility in terms of improvement in your coverage companies now that there is some conjecture on the street that we might be inching closer towards the US-India trade deal?
So, if you see from the August of this year, some of the companies pre-shipped their goods to evade the tariffs. But if you look at the export data for September and the October, specifically for the Chapter 38, which is primarily used for the agrochemicals, we have seen a 10% month-on-month decline each in September and October. So clearly, the companies are facing challenges, especially in the agrochemical space. However, there are silver linings, and some of the subsectors which are insulated from these tariffs are, to an extent, refrigerant gases and pharma intermediates. With the possibility of a trade deal, we could see an uptick in the agrochemicals exports, as well as some of the personal care ingredients, the polymer additive space. This is where we expect an uptick going forward if the trade deal comes through.
So that's as far as the export demand environment is concerned. But what about demand environment in the domestic market? And is global destocking now largely behind us? And what about pricing? Are we expecting an uptick going forward in chemical prices?
I'll just put it into 3 sub-segments. One is the commodity chemicals, where we have seen ammonia prices or phenol prices, even soda ash prices have been muted for quite some time now, and we expect this trend to continue until unless there is a general shift in the demand, or there's a demand uptick in these particular chemicals. Second is the agrochemicals on the domestic side, which has been impacted because of the erratic rainfall in the country. So Kharif has been a washout. We don't expect much improvement in the Rabi either. However, on the destocking front, on the global destocking front, US and Brazilian companies, they have talked about that the destocking is over, and as a result, there is a clear demand uptick in these geographies. Having said that, there is also a case where US and Brazilian farmers are facing cost pressures because of the low crop prices. In this scenario, we expect generic agrochemical players to do well, which serve these markets, and we expect pressure to continue for the patented agrochemicals in these markets.
Right, and on that note, because we're seeing a lot of input cost volatility as well, based on a lot of headwinds that we have been talking about, where do you think the margins of some of the chemical players are listed, and if there has been any significant impact in the quarter gone by?
There were margin impacts due to price volatility for various subsectors, especially if you talk about the personal care ingredients or the pharma additives players, the polymer additives players. However, the players which are dealing with the refrigerant gases and the pharma intermediates, they have shown great resilience and in fact improvement in their margins. We expect that trend to continue, and as a result, we expect companies which are serving these subsectors to do well going forward as well.
Understood. So that's as far as demand and pricing is concerned, but wanted your thoughts on the quantum of supply in the domestic and global market, which is impacting the chemical sector as a whole. And as a consequence of oversupply, if that is the case, are companies scaling down on CapEx? Is that what is going on in the industry?
If you look at the China's chemical production, it has seen a sharp uptick in the last 8 to 10 months. In fact, their chemical production is up almost 6 to 7% on a year-on-year basis in 1H CY25 and closer to 9 months CY25. So there has been a clear oversupply, particularly when it comes to the commodity chemicals. Also, there has been some price headwinds for some of the personal care ingredients as well as the polymer additives. However, there are green shoots visible in particularly in battery chemicals. We have seen LiPF6 prices jumping up more than 40-50% over the last 3 months, where China is the biggest supplier, and this has happened because of supply interruption of various lithium mines in China. Besides that, we have also seen price improvement in the refrigerant gases which are exported from China. So, from specifically of R32, which China used to export at around $5 in January 25 to the prices have almost their export prices have almost jumped to $7 in October 25. So there are mixed trends, and as a result, we anticipate that the companies which are supplying some of the chemicals where there are green shoots visible will be able to weather the storm a better way.
Mr. Parwani, on that note, we'll let you go. Thank you so much for your time today, and thank you for your insights on both the sugar and the chemical space. Okay, viewers, on that note, we're completely timed out on this edition of Markets at Noon. It's a goodbye from me and Ashesha, but stay tuned to ET Now for more news and updates, and Commodity Central is up next.